Top of that, Herwig, this main episode for this week is about central bank digital currencies or CBDCs. We're going to be diving into detail about what they are and what forms they can come in, in addition to the technology that can be used to develop them, and then wrap it up with a snapshot of some of the CBDC activity that's happening around the world as we speak. So Herwig, I understand it's a pretty timely topic for you because you and your team at Security Token Advisors just published a full report detailing all of the CBDC activity in the Security Token Group blog on Medium.
That's right, Kyle. The team and I at Security Token Advisors had actually started working on it a little while ago, and it just kept growing and growing, and I wanted to make sure it was a fully exhaustive list. But interestingly enough, the topic of CBDCs right now is hotter than ever, I think, because of a couple different trends. We know that stablecoins are growing. You may remember, Kyle, that we talked about just a few episodes ago how the supply of private stablecoins tied to fiat solutions is now over $10 billion. And if you remember that, on top of that, we also have this, of course, this global trend of acceleration towards digital cash as Corona and other world factors make the practice of using physical cash over digital cash counterintuitive. So, CBDCs are growing like crazy as a result, and just last week alone, instead of including this in the news cycle earlier, I saved it here for our main topic. Both the central banks of Ghana and Lithuania announced that they were trialing CBDCs to add to the over 40 central banks around the world that are already doing so. Naturally, it's only been the last 3 years so that the demand for the potential of CBDCs has truly surged. And so now we have it all broken down into one wonderful resource list that you can definitely go check out. But Kyle, let's do it. Let's break it down. We always want to try to keep things simple on the show, and CBDCs really can be just that. Pretty much every major country in the world has a context, has a central bank that manages the monetary policy and has economic controls to manage a country's currency. And in the case of Europe, there is a European central bank that coordinates with the individual central banks from the member countries. In the case of the United States, it's the Federal Reserve that works with 12 different reserve banks scattered across major cities in the US. There are similar examples and models all around the world. And in other situations, it's just simply a country central bank working directly with private financial institutions or other state-owned banks. Central banks can be complex, but the simple reality is they manage a country's currency to ensure economic stability and foster economic growth.
Right. When we're taking a closer look, we can see how central banks themselves might influence what the currency reserve is pegged to. The US, for example, moved off the gold and silver standard, and now we have the Fed that controls the supply, in which we've seen them add over $4 trillion in just the last few months.
Right.
I think it's worth pointing out, additionally to our listeners, Herwig, that the central banks typically influence the economy and currency primarily through their lending rates, on top of all the other examples we've shared.
Many different controls to allow them to do exactly that, right? And so when we were actually talking about central bank digital currencies, right, CBDCs, we're really just talking about digital cash, completely backed by the government and issued directly by the central bank. And in that regard, we've seen actually 3 types of CBDCs be evaluated. The retail CBDC is the first kind. It implies, of course, the end retail user, the citizens of the central bank's country, and potentially even foreign buyers who could directly buy digital cash from that central bank. This is not something you can do in most countries, folks.
As of last week, I honestly didn't think you could do it anywhere, but now I've learned retail CBDCs are live and working.
That's right, Kyle, and we're going to get into some of those examples in a little bit. But first we do, let's go over the second type of CBDC, the wholesale CBDC. As we mentioned before, the central bank typically works with the private banking sector to lend directly to the banks to influence how much cash is available in the economy. Since this is only available to the banks, or in some cases, central banks to other central banks, we would call these wholesale CBDCs. Finally, we also have the third version of CBDCs, the last version, which is called the hybrid. Simply means it's the same digital currency for both retail and wholesale users.
And I'll jump in there just to say that the reason you might have different CBDCs is for different purposes, such as cross-border payments, and then maybe a different one for retail functionality, such as identity tracking versus commercial applications to improve bank lending efficiencies and different things like that. So that's why when analyzing a central bank digital currency, it's important to not only understand what type it is, but also to know what technology it's built on. CBDC is not synonymous with distributed ledger technology or blockchain. As I was reading the list that you and your team put together, it became very clear that many applications were built on completely centralized existing fintech software and hardware solutions without really leveraging distributed ledgers or blockchain technology at all.
Yeah, that's absolutely right. Most times, in fact, the cases of technology for distributed ledger technology was too slow for retail CBDCs to be effective. Centralized solutions already existed, which means different things. Let's break it down. In the centralized fintech model, we're talking about no distributed ledgers or blockchain whatsoever. This means no benefits of immutable data, smart contracts, tokens, or even decentralization and other features. The most common CBDC example in this case we would see, especially in the market, was using a QR code system linked to a digital bank account or wallet that was hosted directly with the central bank. Merchants could then accept payments via mobile phones, and users could manage their finances and do commerce right there on their phone too. This was a very popular reason for a CBDC, for example, in Senegal and other parts of Africa as well as in Latin America, because it promotes financial inclusion. Much of the world is unbanked, and this is a really easy way to do that directly with the central bank.
Which is, of course, great because technology enables all of that. But there are also downsides, of course, which is the reality is the technology and the data are still controlled by those central banks, which to many in the Bitcoin or crypto community, they would definitely see that as a centralization weakness for its economies and for its citizens.
Yeah, absolutely. That information can be manipulated to a central bank's benefit and possibly not to our own. And so that's why distributed ledger technology really started to catch on for CBDCs, around 2017. Smart contracts, tokens, immutable, completely traceable transactional data. All of this made much more of an interesting use case for more developed economies in the world. This is where digitization could make the job of the central bank easier, more efficient, and as a result, better overall. But I have to say, based on all this research, the most central banks stuck with either a centralized approach or limited their studies and pilots to distributed ledger technology, not blockchain technology.
Yeah, I can see why. I mean, using, say, a public blockchain to underpin a currency system could work, but it comes with a lot of risks around the underlying protocol functioning, as any issues with it could cause crashing in the economy. So the public blockchain networks have been well known to be riddled with scaling issues as they seek to fix problems to become more institutional friendly. Because at the end of the day, would a central bank really take on the risks of a truly decentralized blockchain when a DLT solution pretty much offers all the same benefits without any of those extra hurdles?
Yeah, and what you just said, Kyle, is exactly the conclusion that many central banks came to. DLT is great, blockchain not so much. Only a few special cases, like the Central Bank of Ukraine and the Marshall Islands, have truly explored going the fully decentralized model. Definitely worth taking a look.
So I think that our listeners now understand kind of what CBDCs are and the different types of technologies. So how about now, I think is a good time for you to share with us some of the highlights from your report.
Absolutely. I'll start off with some of the ones that I think are definitely worth noticing, right? China has the DCEP digital currency that is completely centralized, but may eventually use DLT in some of the lower layers of the technology stack to store information, according to inside sources. But it's worth noting because it is completely backed in parity to the yuan and it's being rolled out throughout China over the next few years and already is being rolled out through parts of Shanghai and others. And retailers already, like McDonald's and Starbucks, accepting it as legal tender in their stores.
It's here, people.
It's here. It's being rolled out. It's already happening. It's a big deal because, of course, China, with its fast-growing adoption, can easily become the largest central CBDC to be live in the world by the end of the year.
Yeah, China's a really interesting case because they clearly embrace and support the digitization of their economy, yet they're very rigid in keeping close control over the movement in cash. In some ways, their closed economic system is fantastic for digitization, as the transition can happen pretty much immediately than in an open economic system. But the original openness and transparency that was so attractive around the world of the distributed ledger blockchain technology is unlikely to be embraced to a great extent, certainly from the transparency perspective, in any form of a digital yuan or Chinese currency. What else caught your eye?
Well, I do have to also give a shout out to Ecuador, which tried to do an e-dinero platform that, of course, again, was centralized because it was in 2014. So as far as I can tell, this is the first to issue a CBDC in the world. And Brazil seems to be in a race with South Africa, Iceland, and a few others for the first live retail CBDC that uses DLT-based technology.
I think it's exciting to see the CBDC sector about to explode. Like, I noticed myself that the Caribbean and Nordic countries in Europe were also very gung-ho and super supportive about CBDCs, which is interesting.
That's a great observation, Kyle. For island nations, the CBDC is, again, a strong benefit over cash, right? Because you have this distributed base of islands. In some cases, there were multiple regions represented under one central bank. Moving physical cash, over islands just simply isn't efficient. And then, of course, the Nordic countries, there's actually the opposite kind of case where you're seeing an exceptional decline in cash usage as they switch to all these private digital solutions for commerce. There again, now CBDs have a huge value add to be able to compete and at least have a good understanding of how commerce is being spent in a country.
Well, I'm sure we could go into this for hours, and I'm sure that there's so much more that you could tell us, Herwig, but I think that we're all out of time for this week's episode. So I think all of our listeners definitely need to go check out that resource, which is live on the Security Token Group blog and Medium. And I also want to give a shout out to Coin Think Tank as well, because they've included our article among their resource list on stablecoins and CBDCs. They've compiled a great list of resources there, so we're happy to be one of the few external links that they've provided as an additional piece of content. So as always, you can find all of the links we've discussed, whether it's the news, whether it's security tokens, whether it's the offerings, whether it's the main topic, anywhere in the description, or we do publish a Medium post with all of these links on it as well. You can also send all of your feedback, comments, and questions to Herwig and I through Twitter or LinkedIn, or post articles on stlmarket.com/news. Meanwhile, stay safe and be healthy out there.
Thanks for listening, everyone. Hope you enjoyed the show, and I hope to catch you again on Tuesday next week.